Hi, my name is Jim Evans, President of Gannon Security Partners. Thank you for taking some time out of your day to watch our video. Our videos are to help you understand the strategies you need to help protect you, your family, your business, and future generations. Those strategies will be all wrapped around retirement planning, estate planning, tax mitigation, and asset protection. I hope you enjoyed today's video. Please don't forget, subscribe to our YouTube channel, follow us on Twitter, like us on Facebook, and make sure you leave comments below so that we know exactly what you want to know. That's what we're here for. Thanks again and enjoy today's video. Hi everyone and welcome back. Today we are doing a video on disability insurance. We're going to go over the features, the benefits, who would normally use it. We've been getting a lot of questions lately about disability insurance. And for instance, a disability insurance policy, if you work, if you have an income, you could purchase a disability insurance policy that would basically give you an income if, God forbid, you were unable to work. Now, there's a lot of different disability insurance policies, so it's important to understand what you currently have with your employer. If you already have a long-term disability insurance policy that is sponsored by your employer, what are the benefits of that? What do you need to know in case you do have one? And then what are the benefits of having one that's just personally owned? The first thing that is really important is if you have one that's through your employer that you do not contribute to, that your employer basically pays for your premium on your behalf through a group policy, you have to understand that if you ever became disabled and that policy would turn around and pay you an income, that would be taxable because you didn't actually put the money into that policy. You didn't pay the premium personally. So that's employer sponsored, it's employer owned, and if you ever leave that employer, that policy is not going to go with you. So owning it personally, one of the few benefits that are right off the top is the fact that, one, you own it personally. If you change jobs, if you change careers, you can keep that policy. You can buy an own occupation policy, which means even if you became partially disabled and you could go work at another type of employment, but you couldn't work at the type of job that you have now or the profession that you have now, it would cover your own occupation, so that would stay with you. The next thing is that if you personally own it and you're paying with after-tax dollars, which means you're paying out of your cash flow, out of your income, you're paying for that policy is going to pay you tax-free. So it's important to understand those, which is better. It's up to you. It's all personal preference there, but just understanding what the policy is. So let's get right into it. So as we went over the benefits, you don't lose your income. So for instance, let's say I make $50,000 a year. My disability insurance policy is going to cover up to 60% of my income. That's going to pay me $30,000 a year tax-free. Okay? That's so vitally important from the standpoint of you wouldn't have any income, or maybe you would only have Social Security disability if you would qualify for that. You know, you might get disability, but that's like $1,000 a month. That's not necessarily going to replace your income. So everything that we do in our lives depends on an income for most of us. If you have a job that you need a paycheck in order to pay your bills, your utility bills, your mortgage, your rent, your car payment, your groceries, going out for dinner, whatever it is that you use your paycheck for, imagine if you didn't have a paycheck anymore. How would you continue to live, maybe not even to the same lifestyle you're at now, but how would you just get by? So disability insurance policy is going to cover that. As I said in our introduction, personally owned, it's tax-free. So you could have it employer-sponsored, but it's important to know the benefits and the features of having an employer-sponsored versus having one that's personally owned that you pay for, that no matter what you do, that policy is going to stay with you. No matter if you change jobs, change careers, it doesn't matter, you're going to keep that policy. It can be partial. So a lot of times when people think about becoming disabled, they think about being in a wheelchair, being bedridden, losing the ability to use extremities, or even maybe something happens to you and mentally you can't do your occupation anymore. If you fall off a deck or a ladder and you can't think the way that you used to, or you might have migraines now, so you can only think for certain periods of time before it becomes too painful or you lose focus. How would you still do your job? How would you continue to earn a paycheck? So very important. It can be partial. So maybe you only lose you can only work 4 hours a day rather than 8, or you can only work 3 days a week rather than 5. All that's going to play into part on how much the disability insurance policy is going to pay you. But the thing is at least you have more coverage. Imagine that you lose 50% of your income because you can only work half the time, but now you have a disability insurance policy that's going to pay you the other after-tax dollars that's going to make you whole. Now you only can work 3 days a week because of your disability, but that doesn't change you from being able to afford being able to work, to live a normal lifestyle, pay for your children's college, pay for your food. All those things are so vitally important. Disability insurance is overlooked quite often. I talked about own occupation. If I am an accountant by trade, okay, I have a job with an accounting firm, and that's how I make my income. But if I can't do that anymore, but I could still be a greeter somewhere, I could be a hostess at a restaurant, I could do a number of other things, but I can't do my own occupation, the thing that I know how to do, the thing that I love to do, that is going to qualify as a disability insurance payment coming to you. Okay, that's going to be a claim because I can't do my own occupation. So it's important to know that if you do have a disability insurance policy, is it own occupation? Okay, vital. This is one of the major things I always talk about with clients. Can supplement employer sponsored. So again, if you have an employer sponsored long-term disability program, right, through a group benefit, that's a great benefit to have. It's not like you want to turn around and say, hey, Mr. or Mrs. Employer, I don't want that anymore. That's great. That's fantastic. It's not costing you anything. They're doing that on your behalf. But it's important to know what that benefit is, what that benefit period is, how much that you're actually going to get after taxes so that you can supplement it with a personally owned policy. Okay? So those are the benefits. Let's go over the features. If you remember when we talked about long-term care insurance in a previous video, we talked about elimination period and benefit period. Elimination period is how long you have to wait, how long you have to be disabled before your disability insurance policy will start to actually pay the claim. So this could be 30 days, this could be 60 days, this could be 90 days. And basically what you're saying when you purchase this policy is, hey, I can go for the first 30 days without an income, I'll figure it out. And then I want my insurance policy to start kicking in. 60 days, 90 days, whatever it is. Obviously, the longer period this is, the cheaper the premium will be on that benefit because you're saying, I'll wait the first 90 days or the 60 days rather than waiting 30 days, okay? The benefit period, you can have 2 years, you can have 5 years, you could have all the way to 60 or 65. So this is how long it's going to pay you that benefit. So let's say I make $50,000 a year is my income. I buy a disability insurance policy for $30K a year. I become disabled at age 30. I'm going to work until I'm 60. I can no longer work for this period of time. We're talking about 30 years times 30,000 is $900,000 benefit. Okay, let me just make sure I did that correctly. Yes. Okay, so you have a $900,000 benefit. Imagine, and this is, you could also have it, one of the features I did not put on here that's very important is you could have it indexed for inflation. Right, because conceivably you wouldn't make $50,000 a year for your entire life. You would start to make more because, maybe you would get increases in pay, inflation would pick up. So that's another feature that you can have within your disability insurance policy. But think about how important that is. That you are going to make $90,000 over your lifetime after taxes. So think about how much you actually would have made. You would have made $50,000 a year for 30 years. So you would have made $1.5 million. You would have walked away with $900,000. So that's what your benefit is. So benefit is between 40 and 60% of your annual income. Well, you say, why can't I get 100% benefit of my annual income? Well, you got to remember, you have to pay taxes on your annual income. So again, if I make $50,000 a year, I have to pay taxes on that. I may walk away with 30, 35, depending on how many children I have, what type of deductions I have. But at the end of the day, you're really only going to walk away with $30,000 to $40,000, depending on what your tax bracket is. So that's why, because this money is after tax dollars, it's tax-free, you have this percentage down here. Stays with you no matter who your employer is. So again, it's a huge feature of owning it personally. If I have an employer sponsored, I go get a new job, maybe that next employer has a disability policy, maybe they don't, okay? Must lose at least 20% of your income. So for instance, I just broke my finger the other day, right? And about a month ago. And it's healing nicely for anybody who's curious. But that wouldn't qualify as a disability. I could still go out, I could still do my job. I had a splint, that wouldn't qualify, right? So you would have to have, the disability insurance policy is going to have certain triggering events, like things that need to have occurred. You have to be under the supervision of a doctor, so you have to have a physician actually say, hey, this person can no longer do what they used to, they have a disability now. So that's one. Two, you have to lose a certain percentage. So the thing that a lot of people get confused on is, like, let's say I'm a business owner, right? I own Gannon Security Partners, and I can no longer work, but the people that work for me still allow my company to make just as much money as I did before, so I'm still collecting the same salary even though I can't work, right? That wouldn't qualify because I didn't really lose anything. Anytime you have an insurance policy, there has to be a financial loss. So you have to have at least a 20% loss of income for most policies. And then, as I said before, you want it indexed to inflation, because $50,000 a year today is not $50,000 a year 20 years from now. It's going to be a lot less. The buying power of that $50,000 will greatly change. Okay, so now who needs it? All right, do you have an income? If you do, you probably need a disability insurance policy, okay? Because again, a lot of people look at their biggest assets, their cars, their houses, vacation homes, whatever it is. But if some event took that income away from you, would you still be able to have those assets? I mean, can you imagine? Could you still own a home and pay your mortgage if you had no income? So, do you have an income? You have an insurable risk here. There's something to look at. Do you have a professional license? So again, when you look at doctors, nurses, financial advisors, attorneys, accountants, right? People who have a professional license, right? If they could no longer do what they do, then they need a disability insurance policy like everybody else, okay? Student loans. A lot of people who have those professional licenses have to go to school in order to get them, like a doctor or a nurse, right? So you have student loans. A lot of people will buy a disability insurance policy that just has a benefit for, like, let's say 5 years. They just buy a 5-year, because they just want to make sure that at nothing else, at the minimum, they're going to have an income. If they become disabled, they're going to have an income for at least 5 years to pay off those debts, because those debts aren't going to go away just because you can't work anymore. So that's another one. Business owners. Business owners buy disability insurance policies a little bit differently. They can buy them on Keymen, right? So if I have a salesman who really does great work, they have a lot of clients, they generate a lot of revenue for my business, I can buy a Keymen disability insurance policy on that individual, so that if he or she ever became disabled, I would be able to still continue to either pay them, I would still continue to grow my business, I can hire somebody else. So that would be another reason that a business owner would use it. A unique skill set. So for instance, let's take a surgeon. Surgeon needs his hands or her hands in order to perform surgery. They might need their vision. They might be able to have to concentrate for long periods of time. Let's say a 20-hour surgery, right? If something happened to them that they either lost the functionality of their hands, or they lost the functionality of their vision, or they lost the functionality of being able to concentrate for long periods of time because they had a head injury, or whatever the case is, right? That's a unique skill set, and those people really should have a personally owned disability insurance policy. Okay? Do you have bills? Are you a one household income? Are you a two household income? Okay? So if you have two incomes in your household, can you live on just one? Is it possible? Or do you need both of them? If you need both of them, then both people should have disability insurance policies, because the stress and the strain that's going to be on that one person who's still working, and then also your bills aren't going to change. Your children are still going to need new clothes for school. There's still going to have to be food on the table. Yes, maybe you could change your lifestyle so that you don't go out as much. You know, you might go on one vacation every 2 years rather than going on vacation every year. There's all different ways that you could scale back your lifestyle. But then there's those certain things that are just necessary, like electric, gas, a car, you know, those certain things. Maybe your health insurance. You know, there's a lot of things that you might have to pay for that you have to think about. At the end of the day, one of the most important things in our financial security is our ability to make an income. That's like a mind-blowing statement for a lot of people, because they think about, when they're thinking about their financial security, they're thinking about, oh, well, I need to put this money away, and I need to save this, and I need to invest that, and I need to buy that. You know, there's so many things that people are thinking about when they're thinking about their financial security, and they forget about the fact that if you take away their ability to actually earn an income, to earn a paycheck, to bring home money, all those other things could easily disappear. So it's a very important topic to understand. This is a very 30,000 foot view. That's what these videos are here for. If you have questions about disability insurance, again, you can call us. We'll answer those questions. I'll personally answer those questions for you. It is such a vitally important topic that you need to understand, and you don't have to buy a policy. This is not sales. This is giving people the information they need to know in order to make good decisions for their financial future. So, I hope you liked that video. Please continue to like us on Facebook, follow us on Twitter, double tap on the Instagrams. We've been trying to put these videos out, so continue to subscribe to our videos. We're trying to get more and more information out there for people to understand what they need to know in order to make good decisions for them and their family. Thanks again, and we'll see you next time.